And we're back in the CrashLabs this week. I've got CJ Kim, Josh Duggan, myself. We got no Matt. He's off doing things, Matt things, but he'll be back. Guys, so another big week, or not so big week in the mining and metals space. What's happening this week? What's new?
Well, I think if you look at it in the macro environment, gold is hanging in there.
Yep.
We're not in the 2000s anymore, but we're still historically at a very high gold price. And I think a lot of people have fatigue going on, and maybe we're feeling the sell in May and go away. But I think a lot of people are wondering why we're not seeing anything move.
So explain some of that cyclicity. What do we typically see kind of on an annual basis for those listeners that don't really follow that whole sell in May and go away thesis? Like what's that come from?
It's just, you just see less volume and less buying in the May to summer months. And people attribute that to people going on vacation and stuff like that. But, you know, if you look at papers and stuff, studies have been done and there has been historical lulls during these months. People just aren't doing anything during this time, same as Christmas time as well. A lot of people take that time off.
Is that just, I mean, obviously being very aware of that for the commodity space, but I have to admit that
in the stocks,
everything is like that.
In the big boards as well.
Okay. There you go. Yeah. So we're heading into the summer lull, as we like to call it, other than what you just described, the same kind of principle. It's neat though, because this is actually a cool time, because a lot of the companies in the mining space have already raised their funds, and summer period is their work period. This is when they get their stuff done, and you can expect to see news falling out of the back of this. And so we should be expecting to see, based on the spring money raising and some of the earlier spring work heading into now, we should actually start seeing some of the press releases hitting the tape on the backs of some of that work.
And a lot of the exploration companies, I guess, pushing up the snow line further up north, where they only have a small pocket of months to actually do a lot of work. So I was talking to another investor in the space, and there's actually something called the snow line trade, where come September to the end of the year, it's a very big flow through window.
Yep.
So they do everything that they can to secure their flow through dollars coming into the new year. But you see like relentless sell-offs once that flow through paper comes free trading, because a majority of the financings are done through these flow through funds and LPs, where they don't really benefit from holding on to paper. So in the new year, early in the new year, you see a huge sell-off, and then that's a trade where you know that they're not going to be putting out a lot of news, because they're all gearing up for their exploration campaigns when the melt comes through. And then they have a small pocket to do the work and really put out, you know, hard-hitting news to rinse and repeat, get the stock as high as you can to raise money again, and, you know, do the same thing.
Yeah. With flow through though, some people may not be versed exactly in what flow through is. I mean, you have, you know, people participating in this market that may be from the US and may not be familiar. They read it, but they don't really know what that means. Do you want to try and explain what flow through is?
So it's part of the Canadian tax regime. They put it out in the late 70s, early 80s, where they wanted to entice more work in the exploration sector. And so they came up with flow-through financing, where every dollar an investor puts into it, it's 100% tax write-off until they sell it, which is 100% capital gains. But a lot of rich people take advantage of this, where, you know, they want to offset a bunch of their gains or offset a bunch of their income, and they invest into flow-through financings, and then it's 100% tax deductible, and it's a great way of exploration companies to raise their money. I think last time I checked, 80% of all Canadian exploration financings are done through this mechanism.
Yeah, it's massive. And then in terms of being able to use the funds, you can't pay CEO salaries and CFO salaries.
No, it has to be directly attributable to technical work. So
drilling, geological work.
And theoretically, that should stimulate the economy in a lot of these more remote. Actually, I guess the provinces in general benefit from the money raised.
So I guess in some ways, I mean, it's a double-edged sword because if you look, there's a lot of, you can't do this in the United States. So American, like projects in Nevada, for instance, they can't use flow-through money.
No.
It only applies to companies spending that money in Canada. Now, there's also, I guess, a bit of a negative, as you mentioned before, with like the snowline trade and a pressure on the stock about, those flow-through funds turning it over. There's really no incentive for the flow-through funds to be up on their money, really, is there?
No, because they make their money essentially nickel and diming investors on fees. And then and a lot of these guys have a backdoor EMD at the same time where they're double dipping. So they can approach a company and say, we're going to raise money for you. And they're also taking like a 10 and 10 or an 8 and 8, like same with what brokerages are doing. And come time, typically, and these are through flow-through funds where they'll distribute the tax savings to the investors. But when it's all said and done, come 4 months plus that one day, they're incentivized to redeploy that capital because they can nickel and dime the investor again, take the brokerage fee, and sometimes they do roll it over into a mutual fund, but there's rollover fees associated with that. And once that mutual fund sells, there's selling fees and stuff. So the tax advantages are huge where, the individual still holds on to it, especially like a province like Quebec where there's super flow through and they're getting like 130% advantage on their investment. So you can nickel and dime an individual investor a lot, but the issuer in the end pays for it the most because these guys will just sell relentlessly.
So you were talking about gold earlier, like 1974, I guess right now, US, which, arguably is a pretty good climate for gold, but we haven't seen the TSX venture. We haven't seen the actual issuers themselves be performing all that well. It's a very sideways market. It's strange. There's a lot of, recycling of capital. It's the same sort of fewer pockets playing in the deals and that sort of thing. So, based on the fact that 80% of the money coming into a lot of those issuers is, arguably flow through. And I know I'm muddling up some statistic here because there's a healthy amount of TSX listed companies that are not taking flow through dollars and are not even situated in, like their projects aren't situated in Canada, for instance. But, arguably, let's just say, half of them or most of them are Canadian based assets, taking advantage of that flow through stuff. Do you think that's making it tougher for a lot of these companies to perform well, like to break the parity, I guess, in the sense of, you've got sort of a chicken and egg thing happening. Gold stocks aren't performing very well. Flow throughs overrepresented as a source of capital, but also putting negative pressure on these stocks as useful.
Yeah, especially if you're drilling and you're not adding more value than you are diluting. And I think being stuck on a descending hamster wheel, these guys are rotating. And it's funny, like we talk about this and we just read that press release where you have that one dissident shareholder and he's angry at the mantra of the one exploration company. I think. Which
one's this?
Northwest Copper here. And,
Proxy fight.
Yeah. And Josh and I read the original press release of the angry shareholder. Where is it here?
So it was like one disgruntled shareholder?
Yeah.
Oh, here it is. Yeah. Grant Sawiak.
Sawiak.
Yeah.
And he's angry at this explorer saying that their philosophy of dilute, drill, and repeat is not working. But arguably, isn't that the mantra or that's what every explorer out there is doing? And maybe he's just had enough of it now. And
you can only lose so much money for so long before you take it into your own hands, right? It's tough to see. Obviously he's trying to replace the full board. He feels that have a better fiduciary duty to spend less money and maybe find better results. But like you said, it's a recipe you could arguably attach this press release to hundreds, if not thousands, of other juniors right now.
And the company is run by Mark O'Day, Oxygen Capital, who arguably, he's got huge wins in the past, but maybe people are not as happy with the last company, Pure Gold, that he did. But you still want to be behind winners, right? They're not all going to be winners. And if he's looking to replace someone like him, I feel like it's more personal than anything else.
Yeah, well, I'm just reading some of this here. Yeah, it seems so. He's got drill, dilute, repeat. For example, beginning in January 23, the board raised over $5 million at a price of 23, with a warrant, or it looks like a half warrant, to do metallurgy and an upgrade to the PEA. You know, the reality is, I mean, you can't upgrade a PA unless you drill. I mean, you could reprice things, I guess. You could reestimate the costs of things, but you know, one of the ways you upgrade a PEA would be to drill more holes and try to roll some new, ounces or some, better clarity on economics of various bits and pieces. I don't know this company at all. I don't know any of the ins and outs of it.
And then he's additionally angry because they filed a prospectus to raise 50 million. 50.
Yeah.
In these markets, that's
maybe that's what it takes. Right.
Yeah.
If they can raise a dime, they should take it. I mean, I'm a big fan of proxy fights because I think they push companies to be better, and there's always the avenue of distance bringing different ideas to the table and executing, but at the same time the costs are extravagant, right?
Well, yeah, he's got Kingsdale, Norton, Rose, Fulbright, and who else?
The company has their proxy team, their lawyers, their communications groups. I mean, you're talking about millions potentially on both sides if this goes the distance, right? And so you say, you're arguing that the company's spending a lot of money, not allocating it towards where it should be, but now you're costing the company upwards of $1 million, $2 million plus to get your way. And the tough thing in a lot of these smaller companies is, when it shakes out, is it going to be better off, or are they going to end up pursuing the same strategy? So it's always tough.
I feel like that strategy to shake up or like show management that you're not happy with how they're running things may work in other sectors.
Yeah.
But exploration though, like
we're in a spend money business.
What else can you do?
Yeah, it's unfortunately that's what it is. It's rinse, dilute, repeat, drill, and hopefully that hopefully that you improve it. Hopefully that you increase the value of whatever the hell it is you're doing. And it's hard to. I don't know. It's hard to comment on this because I don't know either side's case here very well. I don't know what's going on, but topically looking at it, it seems a little silly.
So do you think people like us as investors in this space, we have a higher commodity price in the back of our minds, or else we wouldn't be in this space? But like, why are we putting our money in junior explorers? Why would someone put their money in junior explorers?
Clearly, there's optionality in junior explorers, right? It's hard to be a fundamentalist at a certain tier of this space. Mm-hmm. The reality, though, it is metal in the ground oftentimes, and it's fungible. Like gold is a fungible thing, and there's real material value to what you're finding in inventories that are being built. And so I think a lot of people like that. There's a tangible benefit to the discovery.
When people say gold investors, there's a huge difference between someone who actually invests in physical gold and someone who invests in a speculative play, right?
Yeah, there's a huge difference there because I think it's funny. I was on the plane with Eric. We were heading to Newfoundland, and we were chatting about it. And I mean, I've heard this a million times from sort of gold enthusiasts and pundits out there about why they buy gold, and they're sort of a long bet. But I guess in sitting there with him, I realized really how long Eric was, historically and currently, like his mindset about investing. And when you look at the broader gold space, for instance, you hear about, there's some pushback about, cryptocurrencies and why maybe this market's not performing that well. Where are those dollars going? Is it a crypto market, et cetera? And one of the things you realize with some of these big fundamental gold buyers, will say, is that they're doing it because A, they're long on it. B, I guess A, they're long on it, but the reasons for it being B, they want to protect the wealth that they have. Mm-hmm. It's not investing in it because it's going to double or triple. It's not a trade. It's a protection against, debasement of their currency, fiat currency kind of blowing up, things like that. So it's a security blanket. It's not like a speculative trade.
Right.
Now, I guess when you look at the junior side, now you're getting into the speculative trade. right? Which is maybe why it's more attractive, because it's got a volatility to it that may be more attractive to the retail audience that wants to. But most people don't have that kind of money that they're concerned about protecting. You know, we can all pick up a copy of Ray Dalio's book and figure out that we should be parking 10% of our, you know, savings, let's say, or 10% of our assets into precious metals or gold as a hedge, you know. But how many people actually, like, what if you have $1,000 in your jeans, are you really going to park $100 of it into physical gold?
No.
Like, no, not at all, probably, right? So you want to double it. You want to triple it.
Yeah.
You want to do something else with your money. And so, I mean, you want to invest to make money, right? You want to try to outpace inflation. You want to outpace your currency becoming, you know, proverbially worthless, or you know, the money supply being diluted. And so, I mean, when you look at the crypto space, it was funny because I was looking at this under this lens, trying to dissect why is it that cryptocurrencies, why is it that the gold space is not performing, or the gold stocks are not performing versus, let's say, the crypto space, where they're seeing tons of activity, tons of retail kind of buying in there. There's clearly like a minnow effect. There's clearly like a fervor that's going on. But the reality is, you look at those people, and gold and cryptocurrencies may share a lot of the same narratives, whether it be Bitcoin or Ethereum and things like this. They may share a lot of that same, like, well, you know, you're hedging against fiat, you're, you know, decentralizing, it's blah, blah, blah. And the truth of the matter, I guess, is that, you know, people that are buying that stuff, are they really buying it for that reason? Or are they buying it for the trade? Are they buying it to double or triple their money, like open their e-wallet in a week's time and see their Bitcoin go to, you know, up 500% or something like that. So, I mean, and then you look back, take that same logic and look back at the mining market, and you go back to like the bull market, for instance. And it's like a lot of companies, a lot of these things were performing incredibly well. We were talking to Jamie Levy here last week, and, you know, about some of these like incredible, you know, gainers, let's say, you know, buying things at 5 cents and selling them at $5, you know, just these incredible, you know, risk reward kind of ratio and windfall potential in the mining space. And how much of that was driven by central banks loading up on gold, people like Eric Sprott loading up on gold, and how much of that was driven by retail piling into these stocks because there was a trade. Mm-hmm. They wanted to buy a basket of junior mining stocks because there was clearly a trade that was happening there, and they wanted to double or triple their money. Mm-hmm. And sometimes I look at this kind of languishing gold market, junior market, and I go, you know, there's still no trade here. It's going to be attractive to retail to come in.
So, I mean, what's the catalyst that gets that to happen again then?
I don't know, but it looks like the central banks. It looks like the big money, like the big institution needs to put their foot in the pond first. I think they need to go out there and buy and load.
Yeah.
And once that happens, because arguably what happened in 2008, right? Mm-hmm. Is that you did actually see that big money taking that Dalio school of, you know, let's hedge against this financial chaos and load up to protect our wealth and you know, stoking that signal, and then suddenly there was a trade to be had that everyone else could jump into. But if I look at the last bull market, there's no way the average bear investor, the average person out there, the taxi cab driver that was asking me for recommendations on mining stocks, wasn't asking me that because they wanted to protect their wealth.
Yeah.
They were asking me that because they wanted to know, like they've talked to friends that have doubled or tripled or quadrupled their money, and they want to know how to do the same thing. Same as the crypto thing.
Well, I think that's how we all found out about cryptos, right? It was finding out about the guy who put 10 grand in and got 100 grand back
100%.
in a few days. So yeah, there's so many parallels between that lottery trade. And yeah, I think when we talked about this a lot, there's like next to no people who are investing in crypto who understand the utility. They just love the lottery potential. So, okay, you know, did we lose a lot of those people? Arguably yes, but arguably no, because there's a lot of younger investors who came straight into crypto looking for those large style gains and never got to experience that on the small cap venture side, because the venture's been so held down by historic liquidity lows, by, you know, like lack of interest, by a split of all the ATSs that have been created, where you have like, you know, like traders all over the place and limited centralized liquidity that people can actually trade off on. So I think you need some sort of giant catalyst to draw the world's eyeballs back on the junior trade, not necessarily even the venture, but just the junior trade, and recognizing the potential of where some of these stocks can go. And maybe it's like we've talked about, like the potential massive commodity supercycle or resource crisis that we're facing that people are starting to understand online and to talk about.
Probably going to come from the battery metal space then, when you have these huge institutions and industries coming into them, buying them up, and people are going to realize that gold is, if you want to make a spec trade, gold is way better.
Right. Oh, that's an interesting, an interesting, like, so you think maybe as a derivative, like from a lead battery metals institutional move, where you see like the General Motorses and the Ford Motorses and like these big, whatever, kind of chasing that around. Suddenly people go, I wonder what other commodities, what other things are.
That could be one.
Interesting.
Yeah.
That's an interesting thought. I think somehow you have to have some serious, you have to have a flag bearer with institutional, I guess, like central banks, things like that. I think you have to have that come in first before you can really spark that flame. Yeah. And whether it's a derivative, like you said, whether it's like going after, some tangential thing like lithiums and battery metals, and then going and sort of rediscovering maybe reasons why they should be loading up on other things. Mm-hmm. Yeah, I could see that. But, it's interesting because I still talk to people that say, well, crypto, maybe like cryptocurrencies still offer a lot of the same hedges and the same kind of philosophies. And so why wouldn't you just buy that? And the truth is, though, the crypto investor isn't buying crypto to go spend crypto.
No. Not when it's an asset class that's 4.5 times more volatile than gold, right? They're in it for the spec.
Yeah, they're not buying it to hold it and to be like, I'm going to keep this forever and just add to it.
What's the utility in something like called Coin or Dogecoin, or like they're named as a speculative trade? Like,
yeah, exactly. Like you wouldn't.
Well, you're not buying it seriously. You're buying it as a trade at that point.
Because you think it might go up.
What was the one that you said too? The one that was like the one that was like a scam coin or something?
Scam coin. Yeah, he raised like $60
million. That was it. Yeah,
scam coin. $60 million and then gave it back saying, you idiots, I know this is a joke.
Right. Yeah, well, I mean, that's the whole thing. So,
like rocks, like NFTs and like the offshoot derivatives of that stuff. And it's obviously, like, I don't think anyone goes into it saying, I'm going to protect my wealth for generations, and they're going to buy.
With an NFT.
I'm going to insulate myself from centralized banks and manipulation. And
my grandchildren are going to thank me because they have Coin.
No, for sure. Like, Coin is not offering
thank you.
That.
Thank you, Grandpa CJ, for buying Coin.
Oh, no.
Yes.
Yeah.
So, yeah, I mean, I don't know. I really don't get it. I mean, I hear a lot of it. I hear a lot of the whole, crypto, you could buy it and hold it and and protect yourself. No one's buying it. Like, if I have a wallet with cryptocurrency, I'm not going to the coffee shop and spending it to buy a coffee. Like, it's not, sure, fine. Maybe you can do that. Maybe it's because my argument is, the coffee shop's not set up for it yet. But who do we know that actually owns a shit ton of this cryptocurrency stuff, whether it's Ethereum or Bitcoin, that actually likes to go out and spend it? They want to sit on it because they want it to double or triple. They're there to trade, and then eventually they're going to trade it and try to turn it back into dollars again. Like, that's the whole, like, there's no, it's not, I'm not buying what is being fed, that what's being thrown at us on that front. Not saying there's no cryptos worth owning, far from it, but I just don't buy a lot of that stuff. And so there's a lot of mining people that are kind of pointing the blame game at the cryptocurrency space and saying, well,
they took all our money.
They take all our money or whatever. And it's like, well, there's no trade yet here.
Yeah.
No.
We're hopefully getting in front of one. That's what our game plan is to load up on things that we think are really good, and hopefully we catch it when it comes, and we get in front of it. But there's just, when you look at this stuff, there's no trade. You can have incredible companies doing incredible things, and you just don't see this crazy, but there has been some, but they have to be really good.
I think when you have that one company of 1,000 put out good news, it's the people that know the sector very well.
Oh, that
putting it
are
in,
constituting
that are going in there, right?
Yeah, it's possible.
Not the generalist retail guy yet.
Not yet.
No.
Yeah, it's funny because Jamie was mentioning that he thought maybe a discovery is what we needed. And it's like, but we've had them. NFG.
Yeah,
Yeah.
PMET, NFG. I mean, two big ones, right? But
PMET, NFG, Great Bear,
sure.
Philo.
Yeah.
Like we've had some big ones that have done some
stocks that are doing really well now,
incredible
and
things.
obviously we're raging in the last retail boom, so that are primed for rage again when the money flows back in. But I think the tough thing is, like, you know, Bitcoin's trading history has proved it's not digital gold, right? And you can, you know, pundits could argue that it's in its infancy, and once the scandals and the issues and the
Right.
you know, the liquidity issues get dealt with, then maybe it grows up to become digital gold. I just don't see that. There's too much manipulation and opaqueness there. But when you come back to, you know, our side and you say, you know, what drives the retail sector back to where it was? Again, there's probably never been a better time in history than to be bullish on gold. Like, can we say that? I mean, there's never been a bullish time or a better time to be bullish on every metal essentially in the periodic table than right now. And so you
100%.
have to laugh and think, if it's not going to happen now, when will it happen? Because, you know, we all believe we're on the precipice of something crazy here. You know, you look at, okay, gold's trading a little bit down because we look at maybe another hike or two, but once that stops happening, how it doesn't slingshot back well over 2,000. I mean, it seems like an almost certainty at this point.
Well, yeah, and if you look at it over like a 50-year period, like it's an inevitable truth, or a 100-year period or something. It's like an inevitable truth that it's going in one direction over time. And realistically, a lot of these things are, you know, a lot of these junior companies are going to do very, very well. A lot of these major companies are going to do very, very well. I mean, I think it's like, you know, it's a sector, like as you said, it's a sort of a powder keg. It's a ticking time bomb before everything takes off and goes absolutely insane. And it's eventually, like, you couldn't be in a better primed environment. If you take all the miners and add them together, you're still like not Google or something. Like it's wild.
Yeah, in an S&P heat map, where the bottom right corner and a little dot on the map, right?
Yeah.
So that's the reality. Is we're a very small market in terms of the mining space, that Apple could eat us and continue to build on. But, you know, I do believe, as we all do, and why we're sitting here, is that, you know, that wave of interest is coming. I mean, you know, every day we hear and sit and listen on the news, like we always laugh and say gold bugs are the ones sitting eating popcorn on the sidelines as the world burns. But I think more realistically is that we all see these signs, these de-dollarization signs, the imminent bankruptcy collapse of the potential U.S. government. You have, all the foreign governments now working together, using their own currencies, trading amongst themselves, attempting to dethrone the U.S. You have so much lack of certainty into where, the dollar goes and where the U.S. goes, and then where the green energy transition goes, because there's not enough metals currently in circulation to fuel that. Like, it's just, again, I don't see where this couldn't go but up.
Yeah.
I believe in a world of stuff. I think, like, if you look at what's going on, I was having a conversation with somebody, or some form of debate with somebody about this. We got off on immigration. We were talking about the aging population in Canada and like replacement of it and all of that sort of thing. And the reality was that if you look at all these big economies, you look at like China, for instance. China by like 2030 has this huge population bubble that's like working its way through. By 2030, it's going to be kind of worked through their labor market. And then they're going to be needing, they're not having enough kids. We've heard Elon Musk say that here in like the West, like United States doesn't have enough kids. We have an aging population and no workforce. The same narrative in Canada, that's what's pushing. We had 1.1 million people, new Canadians last year, immigrate. And, the entire thesis on the left, or at least from the talking heads, are saying, hey, listen, and there's some really bright economists and people that have come to this conclusion that it's like, well, they equate everything back into population and population demographics And when they project those forward, they go, here's when your economy is going to make the most and your GDP is going to be the highest. And as your population ages and these younger, this big bubble of, baby boomers or whatever works its way through, then they're going to be a net cost to society rather than a contributor. And you don't possibly have the people to, continue growth. The reality is, though, what's the antidote to that? Because surely right now you hear a lot about immigration. It's like moving people around, but you still have this mega macro issue in the world, right? So like, okay, let's assume there is no borders and there is no countries and there is no any of that. This population disparity is not going away. It's only when you localize it. Like if we say, okay, there's 7.5 billion people on planet Earth, let's look at the 30 million people in Canada and their economy, or the 350 million people or 400 million people in the US and their economy. And then you say, okay, well, let's move some from where? From like Africa or from, China or from, but China has the same problem, and India, everybody has the same problem. And so I don't think that's necessarily I think it's a flawed analysis to anchor everything on population demographics. I think if you look at, like, for instance, innovation, right? Turn of the century, you had a mega problem. The world's population was really big, really hard to feed. 70% of the world's population was basically eating what they kill. They were farming every day. That's the job everybody had. Thanks to the Industrial Revolution, mechanization, stuff, toys, cars, automobiles, steam engines, combines, the ability to industrialize the farming game, suddenly you could support and feed a lot more people, and that freed up people to do other things. And, we've doubled, tripled our lifespans as a result of that. But, we can make more from less, and we're seeing that. Look at like Chat GPT, right? Like this is a crazy innovation. And if you're working at a law firm right now, you don't even realize that your job's going to be replaced. Like there's how many thousands of people working there that are going, well, this machine is able to do all of that heavy lifting. So realistically, or like self-driving cars and like taxi drivers, things like this, like you can actually improve productivity without having a big working young population, but it's going to require innovation, and it's going to require robots and mechanical things that are going to do work for us to break those barriers. And unfortunately, or fortunately for us, I think that comes out of the ground. Most of that, whatever that future looks like, and I guess this is getting really, really crazy and off on a tangent, but if you're imagining like some future of 2050 where, you've got a robot cleaning your house and, cutting your grass and doing all these sorts of things, and assembling your containers that you put your lunch, into or whatever, instead of actual people, it's like, well, that's all going to be made out of metals and stuff. And so I believe in like that future. And if that's an inevitable truth, if we're forward thinking, we know that to be true, then, I mean, we should be bullish on this space.
100%.
Over the long term. So I don't know. I think talking to some people that play the game, play this space, are wired that way. They think really forward. They think with battery metals and battery metals investment, let's say, they're investing in the fact that my leaf blower has got a battery in it. My toothbrush has a battery in it. My car is now a hybrid and has batteries in it, so on and so forth. And they go, this is an inevitable truth, and I'm going to be bullish on lithium. But there's other people that are investing in it, and I hate to say probably the vast majority of them are people that are just buying lithium stocks because lithium stocks have this explosive potential to double or triple overnight.
And easy to understand. Like
Easy to understand. So, but it's very clear that institutionally speaking, the battery narrative, as you said, is being bought into. If we're seeing Teslas and General Motors and like these big companies coming downstream, like that's like the same as like the central bank buying gold, except, these big, huge, massive companies are coming in, and governments are trying to incentivize the discovery and the production curve of these, strategic metals, let's say. That's a real thing. That's a real signal. And that's probably why you have that crazy retail market that exists.
And I was talking to a CEO of a lithium company, and on one of his site visits or site tours, they had a lot of the big motor companies there. And yes, they were there looking to acquire a lithium mine, but they wanted every battery metal. And so when you have one of these guys pick up another base, like a base metal that we all like
nickel or something.
yeah, or even copper or something like that, right? I think that's going to get a lot more eyeballs on other metals. That'll be really cool to see that kind of integration.
Yep, I think it's that's possibly going to be a mega catalyst for things to come here.
Yeah. Okay. Well, let's move on to let's talk about some companies.
Okay.
What do we have on the schedule here?
Well, I think we should talk about Warrior Gold. So the new Kirkland Lake Discoveries Corp. So that's going to be ticker KLDC. That's one that we're investing a substantial amount of capital into. And it's a derivative of Kirkland Lake. It's a Kirkland Lake land package derivative from Newfound Gold and Warrior Gold. It's basically those two companies coming together, gluing their land packages together. I'm biased, of course, joining on as chairman post-transaction here. Again, we're making a serious investment in that. But I think it's an incredible opportunity. So without further ado, do you want me to just sort of take us through it or what?
Yeah.
I think how did Newfound, and I'm asking this knowing, but where did Lucky Strike come from? A lot of people.
Yeah, so Lucky Strike was actually one of our early flagship assets in the company. So when we first set out with the mission to build Newfound Gold, or at the time was called Land Bank, the idea was to go to tier 1 jurisdictions and put together district scale plays. Everything was on the sell. In 2014, 2015, the market had blown up. There was nobody interested in mining. There was tons of prospectors, small companies that were going belly up with their claims. And so if you were bullish on the space and you had the patience and the capital to wait out this bear market, it was an incredible buy opportunity and a time to go in and sweep up and pull up things. What was interesting about this area is it was sort of being fought over the Upper Beaver side. You had Queenston getting taken over by Osisko and then Yamana, and then there was that whole JV of Osisko Yamana, thing that then ultimately ended up getting taken over by Agnico. But the big discovery that Queenston had made was the Upper Beaver deposit. And so what we did is we looked at the area, we looked at the region. We realized this Blake River area was really interesting to the north. And like the Blake River domain, I can talk about that in a second, was really interesting. We knew that we had a lot of the same rocks and ingredients that were there for the Upper Beaver. Notwithstanding, we knew that in a past sort of existence prior to Agnico coming in and rolling this all up, like when it was just Osisko, for instance, or when it was the Osisko Management, the Canadian Malartic joint venture, there was a lot of interest around this property. But the thought process at the time was we need more ground, like we need a hole in the head. We have all the ground in the camp, and so even though this project was really promising, it wasn't something that it was an immediate priority. And for us, we saw this is great real estate. So it's tier 1 jurisdiction. You don't get better area than that. Danielle had very much the same thesis. Both of us were sold on the sort of anti-dogmatic principles that surround the camp, which everybody historically fixated on the Cadillac Larder deformation zone, which is the big fault system that rips through there. And we were bullish to the rocks to the north. We said, the Blake River formation, it hosts a ton of gold and other things on the Quebec side. And it's been pretty much wrote off, much like if you look at Red Lake, bomber assemblage would be like where you would go. But if you were in the Confederate rocks, like it was kind of a who cares about that? And so that was the dogma. And then, Great Bear figured out how to, shine a light on how silly that dogma was and found something amazing in the Confederate rocks. So very similar idea. So here you're looking at a map of Kirkland Lake. So you've got the Ontario side and the Quebec side of the border, and you can see what I'm saying. So here on the Quebec side, you've got a plethora of showings. So, to reel your eyes in, that southern kind of contact of the green stuff, that's the Cadillac larder. That's 112 million ounces of gold, basically from Matachewan all the way over to Malartic, Val-d'Or. Just in the Kirkland Lake camp alone, there's 47 million ounces of gold roughly in there. But you'll see that on the Quebec side in the Blake River, which is all this green stuff, you've got all of these wonderful deposits and showings and things, and they're pretty much non-existent on the Ontario side. So I guess the gold in this area only speaks French. It doesn't speak English. And so, we should not really be concerned. But I think that's the silliness that both Danielle and I looked at. And so we both worked at our sort of respective bookends of this and met in the middle.
Well, why is that? Like, obviously, when there's a border there, the geology doesn't stop. Is it a legacy of the staking systems that both provinces had in place, or?
Oh, well, yeah. I mean, I think there's a lot of reasons for that, but primarily it's sort of a data density bias issue. It's primarily like where you find it, people look around to find more. And so one of the interesting things in that Rouyn-Noranda areas, there's a big caldera up at the Blake River. And so there's a ton of deposits that were found around that, old relic like caldera, or theoretically this caldera. And, they said, well, there's a caldera on this side, but no, well, it's like, well, how come you found the caldera? Well, it's like, because you had all these deposits that were found, and then some scientists came in and figured out why they were all there and tried to make heads or tails of it. But, on the Ontario side, it's just pretty much, there's nowhere close to as much data, or at least there is a lot of data. It's just not organized in as clean of a way as the Quebec side does. So Quebec's always been a lot better at data transparency and making it available to everybody, notwithstanding some of the mechanisms you talked about earlier. Charitable flow through, super flow through, things like that. In Quebec, you always get a better premium. There's a lot more Quebec-centric money that's willing to explore in Quebec. It's been like that for a very, very long time. Ontario doesn't have the benefit of that climate. So you're going to find more things in Quebec in obscure places, whereas Ontario just simply doesn't have the architecture financially to support that. But it doesn't mean the opportunity is not there. So hypothetically, if you were to collect every shred of data on the Ontario side, you could find evidence of other calderas and other things that are similar to that, and that would be perfect, conduits for more mineralization. Steph, you want to go down a slide? So here you've got, this is a big study that was done, and obviously with Goldspot, we were a part of it. So this is the Metal Earth program. This is a huge program. So over $77 million was injected into the Abitibi, and it was really a combination of the Research Excellence Fund in Canada, so federal money, and the academic institutions. And so what they wanted to do was understand what makes the Larder Lake Cadillac Deformation Zone tick. Why is there so much gold on this thing? Why is it so well endowed? 112 million ounces on just that crack alone. Yeah. Destor Porcupine to the north, 90 million plus. What makes these things tick? And there's all kinds of geologists in the camp that have argued about where the gold came from. Was it already there and just got remobilized into these cracks? Was it these cyanide intrusives and porphyries and things? Why is it all here? Others have surmised that, it's just a big crack that goes right through the crust of the earth into the mantle. And at that time, which is in the, Archean, this very deep plumbing system provided a conduit for gold bearing fluids to come up and impregnate the surrounding cracks and with high grade orogenic auriferous gold veins. And so really this was done to dispel that. So here you can see this huge survey. So this is it actually here, and it's this big, thick black line running north-south. This is an MT seismic survey, which is extraordinarily expensive. And it cuts across everybody's ground, including ours to the north. And you'll see it actually cuts our Malvern Lake fault and the Mist Lake fault system. And again, it's to try to image this Larder Lake Cadillac Deformation Zone and see what the heck is happening in it. So here you can actually see, so this is pretty crazy. You're looking 35 kilometers deep here. So this is going through the crust. And you can see the Larder Lake Cadillac Deformation Zone basically propagating all the way through and tapping into, mantle fluids. And so this is, showing and lighting it up very, very well. And this is on the MT data. And I guess what they didn't expect to see here was another one. So if you look to the north, so just to the right of that circle, there's almost like a mirror image one. And that's called the Malvern Lake or the Mist Lake fault system. And that extends down into the same goodies. Now on this particular slice, it obviously looks like the Larder Lake Cadillac deformation zone is a lot hotter, let's say, in terms of colors, but that may change from slice to slice depending on where you are along this property. But in principle, you've got another system that's plugged into the same goodies. And so what's interesting about that is, in KL, that one LLCDZ, that Larder Lake Cadillac deformation zone, that's 47 million ounces of gold just in KL. So, it's hard to imagine that the Malvern Lake, Mist Lake one is going to be a zero. So this is the seismic. This is their data, not ours. This is published last year from the report of the Merck findings in the area. So here you can see on the seismic, you have the Larder Lake Cadillac deformation zone, which is well imaged all the way down, and all these sort of like flat reflectors in between. And then you've got the Malvern Lake fault, which is almost like a butterflied image there. And then you have all these reflectors kind of spanning in between them. So these things are interconnected. This isn't just like a one, they're not just parallel or subparallel type features. They're actually interconnected. So you would imagine in like the fluid dynamic universe that you would have like, very similar fluids whizzing around in between these things. So the Malvern Lake fault should matter. So if we look at like, why do we care? What kind of evidence do we have at surface on the Malvern Lake fault? Well, we've got lots of stuff. We've got tons of high grade, both on the fault and adjacent to it. We've got some old mine shafts. We've got the Russian Kid, which is owned by this Australian junior called Labyrinth. So they've got a 500,000 ounces in situ, I think somewhere around 5 grams. But there's a historic kind of higher grade mining history there as well, sort of mid-century type stuff. But nonetheless, it's plotting right directly on the Malvern Lake fault zone on the Quebec side of the border. And, it's an old mine and it's got real ounces in the ground. So this is evidence that the Malvern Lake is in fact mineralized. And so we've done some work to try to tease out some areas that, might matter more than others. It's a mixed bag in terms of how you can get in there and get good samples and things, but we've got some really good stuff both on the fault and adjacent to it. So, and for the, Kirkland Lake enthusiast, for the, we've got the cyanites and we've got the, the ultramafics and all the goodies whistling around there. So if you think the gold still comes from those things, then we've got those too. So this is neat. This has got the regional mag on the background, which isn't all that useful, but what it shows you is really how much ground there is here. We've got, 20 kilometers plus of like the Malvern Lake, and we've got that Mist Lake fault as well. We've got all these high grade showings kind of scattered across all these old mine shafts and mine complexes and historical development plays. So it's an area just, this is the best real estate you can get. You're a stone's throw away from mills. You're right there. It's hard to get better real estate than this. There's a little raft of claims in between our kind of east and west side. We've got a little land bridge connecting our east and west side. That's for assessment credit spreading reasons. But right in between us, Eldorado's got a toehold in there. And then to our southeast corner, just south of the Malvern stuff, you've got a Mag Silver that bought the old Bonterra stuff from Gatling. So they bought that for $30 million a couple years ago. So you got a couple other players in there, and then Agnico to our entire southern border. So this is, you don't get as tier 1 jurisdiction of this. You can drive pretty much anywhere from town. It's Kirkland Lake, in a world where jurisdictions are starting to become riskier, and, South America and other places becoming less attractive. This is premium real estate. And there's lots of low-hanging fruit targets. There's lots of stuff that we can follow up on immediately. And there's some moonshots that we can take here too. Like on the Malvern, we've got some really nice till anomalies there, prove that we've got an extension of that system, and that major fault system may matter for quite a distance. So here, this is zoom in on the Warrior Gold kind of core area, I guess you could say. And here you have the Corona break. I mean, we don't have a seismic survey and MT survey cutting across it to show us how it relates to the main break. But realistically, there's historic mines and shafts and all kinds of high grade and goodies and things. And then you've got the good fish splaying off to the north with multiple shafts up there and some underground workings and that sort of stuff. And Danielle was sort of tasked with a couple of things historically with Warrior, trying to juggle, land consolidation, which is awfully tough to do in an area like this because you're in such good real estate that so many prospectors have, dribs and drabs of the picture. It takes, it's taken well over a decade to glue all this together. But she's worked a lot on Melzone and Jozone. That being said, still some work to do there. The best hole is the deepest hole and that stuff. So getting under there and seeing what goes on underneath that is probably interesting. But I think where that good fish structure meets up with the Corona break and that Deloy area, I think that's going to be an area that I want to check out.
Was that Jozone historical?
Yeah, that's a historical one. That's a historical value. Yeah,
that's a pretty juicy hole, though.
Oh yeah, there's some real high grade potential here. So this is a real mineralized system, and again, you're not starting from zero. This is so we'll come out the gates, I think, screaming with a couple of rigs here and hit up everything with a pulse and then obviously we've got some bigger picture kind of geology things that we're going to try out. So it's for 15 million pre-money, raising 8.25. It's going to come out in the low 20s here, and 20 something million valuation. 8 and change in cash. Active drill program. I think it's a good buy. I'm biased because we're buying.
Yeah. So it kind of checks one of our checkbox that, on the list that we always talk about district size plays.
Yeah.
And I think every major story that we've done very well in has been this district size play. Is it more part of storytelling, or what's behind, why do we love district size plays?
Well, I think what's interesting about a district size play for starters is that, let's say let's look at the opposite. So if you just had around those best kind of showings, you just had a very localized claim package. Like let's say you took the Corona good fish stuff and you had just a localized, claim package around that. Mm-hmm. And then you figure out, well, holy crap, the Corona break is prolifically mineralized. You only own a piece of it, but there's still another, 10, 12 kilometers of it, multiple deposit potential that could exist. It's nice to have that ground consolidated and to be able to work off of a canvas that if you find something, you can easily find more of it. And there could be like a multi-mine sort of potential or multi-deposit potential. Very rarely when you look for something do you find the very best spot right away, So sometimes when you go into those areas, you see very limited claim packages around things, and they're part of a bigger story, right? And if you're a big company, look at Agnico. I mean, they have the Golden Mile. There's 25 million ounces of gold from Macassa, right? Hargraves, Lakeshore, the Sylvanite, and all that. But the reality is, they've got this huge land package along the entire Cadillac Larder, all the way over to Virginia Town almost. And that entire land package is, has the possibility of hosting many, many mines, in there. And so that's a very attractive thing for them to buy. They could have bought just the one, mine complex, but they didn't. They wanted the whole picture. And so I think the reason is we like district plays so much is because we saw that in times when markets were under duress, the projects that were getting sold and consolidated and bought and financed were always district scale plays. It was never the kind of standalone things. Yeah. Like they were the most resilient ones. And it's hard to deny the real estate that you have in that project, for instance, So that's a big reason why we like district scale plays and not very localized small land packages.
Okay. So I guess a good segue into a company that everyone wants us to take a peek at is Northern Superior. And then when I looked at the corporate presentation, it said district size play, but it's one of the more chatted about companies on CEO.CA. And highly requested that we take a little peek under the hood here.
What's the market cap of it, Ian? 61.
Okay, so it's pretty big.
I think it had like 5 in cash, something like that. My guess.
Well, that's the thing with district size plays. A lot of people want that story or want that a part of their narrative. But what happens if you can't raise money for it? Then it's not really a district size story anymore, right?
Well, this one's a little frozen in time because it's sort of a district scale play that's being constructed. So I did have a chance to look at this one prior to this call. I forgot the market cap offhand, but if you go through it, they're in a really, really cool area. Yeah, so they're in Chibougamau. And like they've got a lot of big tiles of ground, but there's clearly more that needs to go into this. Like Nelligan, for instance, kind of needs to be rolled up into what they're doing. Monster Lake, some of these other more material things.
Yeah.
There's sort of like, remember like Double Dragon? They have like half the amulet right now.
Yeah.
Like they need the other half. So this is kind of like the way I look at this one. So Nelligan kind of sucks. Like it's big, low grade. It's okay. It's huge and it's low grade and it's a big blob, right? Which is fine. Those can work. I think I Am Gold struggling to make Cote Lake work under that same premise, but this is a little bit more of a discrete blob, I think, than Cote Lake. But what's cool is the Filbert project that these guys are bringing would hypothetically bring into that scenario is of critical mass and it's quite a bit higher grade. So when you blend those two things together with a mill, let's say, you could have a much better, I think much more robust economics to justify capital investment and construction. Same thing goes with Monster Lake. I mean, Monster Lake is sitting with 430,000 ounces in situ at 12 grams. That's incredible. That's really high grade. For 500,000 ounces, pretty good. It's only 12 kilometers away. But again, I think it's gluing the Nelligans and the Monster Lakes and the Filberts and stuff together to really make this whole area work.
At 60 million, are people assuming that that's the path, or do you see a re-rating if that actually happens?
Well, I do see a re-rating because I think it's fair to make some of those assumptions. But I think if you look at Filbert and the grade and the size of Filbert right now, plus some of their other stuff like their Chevrier project, they're well on their way there. They've got real ounces in the ground. So if you kind of look at across the suite of projects that they have, I think the $60 million valuation is kind of baked into that a little bit. I mean, it may be a premium right now, but the reality is like, what's I Am Gold doing? I Am Gold is not frigging around with Nelligan. Like they're beating their head against the wall with Cote Lake. Mm-hmm. Like this is the last thing they have on their mind, I think, is to go out and build Nelligan. Yeah. Same thing with like Monster Lake and playing this whole game. So it makes a lot of sense for them to sit down at the table with these guys and figure out something, whether even with a back end or something. And if they did that and this all gets consolidated, it's worth a fortune.
Yeah. And you have unlimited money coming in from Quebec, and we're talking about how much easier it is to raise money there, and you have a gazillion Quebec funds set up just for this kind of stuff.
Yep.
So
Chibougamau is pro mining. This is an area that will work. Like this is not an area where you're going to have a ton of trouble. There's infrastructure in the region.
So let's go up and see who runs it really quickly. Victor
Cantori. So Amex.
We saw him just last week.
Yep. Victor's there. That's right. We did see Victor last week. So Victor's in there. Simone Marcotte. These are all real good guys. These are all real kind of players here. So this could really work. Michael Gentili, biggest shareholder. That's important. Michael Gentili's been a very big supporter of the junior space, and he's been sprinkling a lot of dough out there in companies and taking a very large stake in things. And so it's nice to see. And I know that he does his homework too. Mm-hmm. So it's nice to see those types of people involved. So you got the right team. You've got a good project. It sort of relies on something with I Am Gold, I think.
Yeah.
To some degree. Can it work with just Filbert and
maybe your time frame has to be extended a little bit longer?
Yeah, I wouldn't. I don't know. I wouldn't.
No, you wouldn't bank on I Am Gold coming in here and acquiring them, though. Would
I
you?
don't think. I think probably in a past life I would have said yes. You know, but given the financial state of I Am Gold and the weight that's been put on, like the runaway dumpster fire that has been
Cote Lake?
Cote Lake, at least it seems. Yeah, I just can't imagine them going in and, you know, doing something here. Although it would make, I mean, if I was an I Am Gold, I'd do it.
Put all your eggs in this basket rather than Cote Lake.
Well, you know, at least this one's going to get financed. At least,
Yeah.
yeah, I don't know. It's a tough one for them. They have to like look at Nelligan. It's just a blob, right? It's pretty, like, Filbert's pretty good. It's right there. I don't see a ton of discovery potential on this Filbert, so I don't see this as something that I'd be like, oh, they made some massive new discovery. I think that's kind of like their discovery upsides, maybe, which I feel is exciting, you know, as a stock to own. There may be some news that comes out, like, look at, they've got some circle linking mineralization and da-da-da. Like, okay.
But you're saying in this case, it's like 2 + 2 = 10 kind of thing, right?
Yeah,
Just
I think
because
so.
there's so many other positive externalities that come to the table with any sort of consolidation. So,
Yeah. Yeah, I think so.
all right. So this is one consolidation play to keep an eye on. It's on the radar.
There you go.
Yeah, I would. You know what? I think this is thumbs up in principle. If I was a shareholder of this, I would be happy to be a shareholder of this. I don't know what's the cash position in this company. Just before I give it a final thumbs up, thumbs down.
Does it say on the website around 4 mil?
4 million.
4 million.
Enough to hold them over. You know.
Enough to hold them over, not enough to do any real material catalysts. So the only material catalyst I would see would be something coming down the pipe from I Am Gold, realistically. And if that doesn't happen, 4 million, then I'm a little bit bearish on.
Because Philibert doesn't have a resource or anything on it. No
Does it have a PA on it?
imminent resource. So it's going to, no PEA, but they're going to put out a resource.
Oh, they don't have a resource yet.
Yeah.
Right. I think I was kind of just looking at the values and the dimensions of it and the grades, sort of coming up with what I thought was maybe there. So, yeah, my guess is a couple million ounces, I think, I'd say. And the grade is be a lot better than what they have on Nelligan. So I'd see like a couple million ounces, like 2.5 grams. That might be bullish, but
Nice.
rather than what Nelligan's got. So that's just like total thumb suck, total guess.
Yeah.
Like there's no science in that.
Let's see. What's the over and under on Denny's 2.5?
Yeah. Yeah.
Place your bets.
Place your bets now.
Cool. So, you guys want to chat about anything else?
Would you buy it?
Yeah, Siege, what do you think?
I think I would wait. I like it. I like the idea of it.
If I Am Gold comes in, is it too late?
Yeah.
I wish I was at the table earlier. Like, I like it. I like everything about it. I feel like if I buy into it now, they're taking their money off the table.
If I was, yeah, that's a good point. If I was in it at like 20 cents or 30 cents, I'd be like more than happy to.
Oh yeah, I'd be like, this
Yeah.
is the best.
yeah.
I still like it. I like if someone goes on and is like, oh, I'm gonna put some money into it. I'm like, very cool.
Yeah,
I look
yeah,
at
no,
it's
for sure.
nice.
It was like,
It wouldn't be like,
I wouldn't judge it.
Yeah.
Yeah. Okay.
Yeah.
There you go.
Cool. Yeah, interested to hear other people's opinions on CEO. after
Like,
they see it.
I feel bad because every time someone tells us to review a stock, like it's very hard to say yes or no. Even when we went through the 3 and got enormous blowback from what we were saying, but like, what do you want us to say? Everyone wants us to just pound the table on what they're looking at, but
Yeah, everyone's
No,
deal
it's
is their
like-
favorite. Everyone's investment's their favorite
Yeah.
thing ever. So if we're going to be objective and critical, then
Yeah.
it's not going to.
We're not going to please everyone, but that's why we're doing this.
For sure.
So
all right. Once again, not investment advice.
read the disclaimer.
Do your own due diligence.
Do your own DD. Yeah, we don't know what we're talking about. Do your own DD.
GLTA.
Yeah, yeah. The that goes for both the Kirkland Lake deal and this one, and yeah, whatever. So
Everything.
yeah.
Okay. Anything else, guys?
All right. Well, let's wrap it up. No, I think that's good for today. We talked about everything we need to talk about. We got some other ideas. If anybody has any other ideas, wants us to talk about things or evaluate a company, feel free to recommend it on CEO.CA/CrashLabs.
Exactly.
and go in there and make your recommendations, and we'll table them up and we'll go for whatever gets the most kind of posts. Don't get into the whole DM thing. It's fine. We're looking at them, but the whole DM thing is a lot to consolidate. Like just go on the CrashLabs board and write it there. And then that saves us some work, and, and then we can sort of run a tally. Then, if the project surfaces is the most popular thing, everybody knows that. So here we go.
Excellent.
Okay. Thanks, guys.
All right,
Thanks, Steph.
Cheers.